Right, to discuss this, we're teaming up with the Financial Times to bring you a sneak peek at what's in the paper today. The FT's Ben McLannahan joins us live from Hong Kong. Ben, good morning. Thanks for joining us.
Good morning.
You talk about the capital strength or lack of strength of China's banks in your Lex piece today. What's the reality, Ben? How strong is the capital position of China's main lenders?
Well, the reality is that we like to think of capital deficiency as a Western problem or a developed market problem. US, Europe and Japan principally have been the biggest capital raisers this year. But it's not. If you look at China relative to the rest of the world, it's no better than average. The highest ranking bank on Bloomberg's ranking is about number 80. That's by core tier 1 out of about 244 that have relevant up-to-date numbers. So what the banking regulator now has done is to write to each of the banks, asking them to provide a plan to replenish capital over the next months and years.
And do you think we're going to get a plan? What do we expect to hear from the biggest lenders? I mean, what sort of formulation will they be unveiling in the near to mid-term?
Well, the plans are likely to take a variety of forms. Of course, banks have a variety of levers they can pull to raise capital. The most obvious thing, which is what HSBC, Standard Chartered and so on have done, is just to gouge customers with higher margins. And that's the shortest route to rebuild capital levels. But that's not really a goer in China because it's a utility-like banking system where it's very closely regulated on both lending and deposit side. So the best routes for the Chinese banks to raise money are to raise equity or to raise debt or to cut dividends. And in none of those instances do the current share prices look terribly worth buying.
And of course, mid-sized lenders are already jockeying for capital. There are reports that the nation's 4 biggest lenders have submitted capital plans. I suppose investors are positioning themselves for dilution, aren't they?
That's right. We had a report out on the CBRC, that's the China Banking Regulatory Commission website on Monday, announcing that it had asked the biggest lenders for plans to replenish capital. And that knocked the shares both in Shanghai and Hong Kong. Yesterday's biggest fallers in Hong Kong were 2 of the big 4 listed lenders. And this morning we've seen the same trend. The top 5 fallers, in fact, are all banks, including Bank of China's Hong Kong operation. So investors are making their own minds up and they're selling.
China still witnessing record loan growth this year, Ben. Is that fueling further problems for the banks down the line and for the economy down the line?
Well, yes. If you believe published figures, China's non-performing loan ratio is amongst the lowest in the world, just less than 2% in June. But surely that's only got one way to go, and this current concern over capital is just a reflection of that.
OK, Ben, we'll leave it there. Thanks very much for joining us today. The FT's Ben McLannahan joining us there from Hong Kong now.